Hi there. In this video, I want to talk about the four best sources of finance. If you have just started your business or you're thinking about starting a business, what are some of the best sources of finance? So let's get straight into it. I want to give you four areas. I'm going to mention them first and I'm going to talk about them individually. Number one is organic. Number two, banks could be, and also government agencies. Number three, family and friends. And number four, specialist investors. So let's look at the number one, organic. What do I mean by when I say organic? What do I mean? I mean that you try and generate money for your business from your business. Let me say that again. You generate money for your business from your business. An example of that could be this. If you're delivering a service to a particular group of clients, trying to get them to pay some of all of the money for the service upfront is a way that you can actually generate money for your business. I've said this before, and you will have heard me say it in my videos. When we were working in property, we used to find property portfolios for people or develop property portfolios for people. That's a better way of saying it. And we used to charge maybe anything in the region of 5,000 or more upfront back in those times. And that money is what we use for the cash flow to actually run the business. A little bit risky, but it worked out. Um, so trying to get people to pay up front for the service you're about to deliver is not a new thing. If you go to your accountant, they're probably going to charge you money up front before they do the work. If you go to your lawyer, they're going to charge you a deposit, they're going to charge you some money up front. So I don't know why business people feel they cannot do the same, because you can. It just depends on how confident you are about delivering the service. If it's a service you know you can definitely deliver, try and get them to give you some money up front. That would save you the need of having to ask anybody else for money. Every time you ask someone else for money, it's going to cost you something. It's going to cost you a relationship. It's going to cost you some money. It's going to cost you something. So you want to avoid all those costs if you can, at least in the beginning stages. When you can, you should get the business to pay for itself upfront. All right. I hope I explained that properly. If you have any other questions, please put it in the comment box and I will be really excited to respond to those. Number two is banks. If you have a good credit record, you have a good credit, and your banks are probably going to look to you more favorably. Maybe you are one of those people that are creating a side hustle. So your regular salary comes into the bank, so the bank knows they're going to get their money back, if anything goes belly up with your little side hustle that you're doing. So they're going to be willing to give you money. It'd probably be easier for you to get overdraft from the bank, particularly if you're trying to create products or you need to pay for something for you to get to the next level. I do not advocate you paying for large equipment before you actually make money. You need to try and make money depending on the kind of business you're doing, but be careful about spending money. Don't throw money at everything. Throwing money at everything is not necessarily the solution. Sometimes having too much money in the beginning is actually a problem. It's not. A help, because when you don't have money, you're probably going to become more creative with your mind, and that would help you in the long run. So anyway, going to a bank could be a good thing because you've got good credit. There's something else, particularly in the UK, called government agencies. Government agencies like enterprise agencies. If you do not know where one is, if you call your local council, they would signpost you to a local enterprise agencies. And local enterprise agencies, government agencies, tend to have loans. For example, startup loan is one of them. British Bank is another one in the UK where you can possibly get startup funded. They probably give you a loan as opposed to a grant, and for you to access these government agencies, you're probably going to need a business plan. If you go to your bank, you may or may not need a business plan, depending on how much money you've got and how good your credit. With the banks, it's all about credit rating. Okay, if your credit rating is good, you're going to get money. You don't need to show them a business plan. You just tell your bank manager, I need an overdraft for so much, and they'll probably just give it to you anyway. But to access money from government agencies, which you will find is the same in most countries, you will need to complete a business plan. So, if you're looking to get a business plan very quickly, you can look on my course on Udemy, which teaches you how to put together a business plan by using ChatGPT. All right. The third area, which is probably one of the most ignored areas of funding, is family and friends. Now, why is this a good source of this? This can be, apart from organic, I think the second best for me, if I'm going to choose out of all four, I would choose organic and I would choose family and friends. Now, family and friends can be tricky, but also can be one of the easiest ways of raising funding for your business. Why is that? Because family and friends already know you, and family and friends, most of the time, they want to help you. Maybe you have some uncle who really likes you and wants to help you, wants to see you succeed. He or she or auntie is probably going to want to give you the money. And they're probably going to give you money and say, oh, pay me back when you want, or pay me back when you have it, or just keep that money, okay? And you may be able to raise money from family and friends. The trick is to always confirm something when you raise money from family and friends. And the question you need to ask is this: is this money a loan or an investment? Okay, let me say that again. Is this money a loan or is it an investment? If the money is a loan, then it means that whatever happens to your business, that person is expecting the money back. That person is lending you the money and they expect to get it back. If it's an investment, then you need to remind them that the upside of it is that you would own shares in this company, or you would be positioned to earn so much from this company. But equally, if it goes belly up, then you get nothing, you lose your money. As long as they are aware of those two factors, or and you are aware of those two factors, and you bring it up at the beginning, then you know that you have done the right thing. What generally why people are a little bit apprehensive of raising money from family and friends is because they've heard horror stories. And the reason why there are horror stories is because nobody asked the question: is this a loan, or is this an investment? If it's an investment, then you can make money, but you can also lose money. If it's a loan, well, whatever happens, I would have to pay you back. So that's the difference. And I would suggest you write an agreement. It doesn't have to be a complex one. If you go on ChatGPT and get ChatGPT to write you a simple agreement, maybe a 10-point agreement on with a family and friend business, financial business loan, then or investment, then you probably get something reasonable enough for you to sign. When you're signing an agreement with a family and friend, it's probably easier to just keep it simple. Okay. Number four is specialist investors. So somebody is a specialist in a particular industry. Maybe they're already knowledgeable in tech. Maybe they're already knowledgeable in food tech, or they're knowledgeable in consulting, or they're knowledgeable in web development. So you're going to those kind of people for funding, and they tend to be business angels. Now, I must admit, funny enough, in my career, I've not yet raised money from angels. I've been part of a group that raised money, but not directly myself. So my knowledge in that area only extends up to a point. But I am very familiar with how they work. Now, if you're going to an angel investor, you better be ready. You better be ready for the questions they're going to ask. That's why I'm going to do another video on the questions that investors ask, and how you can be ready for that. So specialists investors could be very good because they already have knowledge of how that industry works. And if you bring in a legitimate type of business to them, it's easier for them to see through it and it's easier for them to also help you. Sometimes going to an investor can be a very good thing, whether you're going to get the money or not, because of the kind of questions they're going to ask may prepare you for your next move in the future. So let's stop there for a moment for this video. Um, Number one, organic. That's my biggest favorite of all four. The second one I talked about was banks and government agencies, and the third one was family and friends, and the fourth is specialist investors. Wow. If you like this video, then do like it. If you like it, do share it. If you like it, do sign up for one of my ebooks and also to attend one of my live courses. So I look forward to seeing you soon and look out for the next video on the questions investors ask. See you in a moment.